Hello and welcome to another episode of the Dana Yee Show. If you've never seen my face before, my name is Dana, and on this channel I cover everything about money and finance. And in this video I'll be going over some stuff about taxes. They may seem boring, but bear with me. In this video I'm going to explain why a large tax refund is bad. Side note, I am not a CPA, so if you have your own specific tax questions, I would hire a CPA or do your own Googling. Before I start, I wanted to sort of lighten the mood with this meme I found that is kind of relatable to how taxes work. So the government says, okay, you owe us money, it's called taxes. So you say, all right, how much do I owe? And the government says, you have to figure it out. And me, I say, oh, that's so cool. I just pay what I want to pay? And the government says, oh, no. We know exactly how much you owe, but you have to guess that number too. And then I say, okay, what if I get it wrong? And the government says, you go to prison. This is kind of exaggerated, but I'll explain more. Firstly, I always like to define terms that have to do with the topic I'm talking about so that people who don't know what I'm talking about can get more informed, or I can clear up any misconceptions that people may have. A tax return is different from a tax refund. So a tax return is the actual form that you file every year with the IRS, and you fill this out with information from various tax documents such as W-2s or various types of 1099 forms. So the tax return is the form you fill out. After you fill out a tax return, you might get what's called a tax refund. And a tax refund is what's given to you by the US Treasury if in the previous year you paid more in state or federal taxes than you needed to. And I'll explain how that works again in a little bit. But the main thing here is it's a refund. You overpaid on your taxes, so they're giving you money back. And some slight nuances in the 2020 year, because 2020 was an interesting year. You can actually claim missing stimulus money via something called the recovery rebate credit, and the standard deduction was increased from, I believe it was $12,000 before, to $12,400 for single filers and twice as much for married filers. So how can you end up paying too much in taxes? The US tax system is sort of this like pay as you go system. So instead of having one large tax bill at the end of the year, you pay a little bit along the way. So every week or every month, some of that is withheld, hence the withholding tax from your paycheck, and your company gives it to the government, essentially paying your taxes. And as I explained briefly before, if too much money is withheld, so if you end up paying too much in taxes, the employee will receive a tax refund. On the other hand, if you don't pay enough in taxes, so if not enough was withheld, you'll have an additional tax bill. So quick example, if you owe $9,000 in taxes, but you ended up paying $10,000 over the year, you would get a tax refund of $1,000. Conversely, if you owe $10,000 on the year and you only paid $9,000, you would get an extra bill for $1,000. And withholdings are set up via something called a W-4, which is a form that employees have to fill out when being hired by a company, and I'll cover it and I'll kind of show it in a little bit. As for why a tax refund is bad, I think the best way to explain it is in the terminology itself. It's a tax refund, not a tax credit or deduction or some other term. And what is a refund? If you buy, I don't know, say a hat for $10 and you don't like it, so you return it to the store, you get a refund of $10, but your sort of net change in money is zero. You gave them $10 and then they gave you $10 back. So it's not an extra credit. The government isn't giving you free money. It's money that you already paid to them that they're refunding to you. So again, the key term here is that it's a tax refund. And I think the misconception that some people have is that it's like a bonus from the government or it's some sort of luck from the government. But actually, what does the government do? This essentially is a loan from you, right? But when you pay $2,000 extra in taxes, you only get a tax return of $2,000. You don't get $2,000 plus 5%. So in this case, it's an interest-free loan to the government. You lent them money with no interest. And generally, when banks lend people money, when credit cards lend people money, they charge interest. So if I loan you $100 in exchange for taking on that risk, I might charge you 5% interest so that I get paid back $105. But in this case, you're loaning money to the government, they're not paying interest, and you can't use that money in the meantime to invest, to potentially grow even more, and things like that. And generally, it is avoidable, and I'll go over how it's set up and how you can change this. To be completely honest, I'm not sure how this works for self-employed people, so if you are self-employed, I would definitely talk to a CPA. But for employees, this withholding is calculated via a form called the W-4 that you have to fill out when you're hired. This is one I just pulled off the IRS website for the 2021 year, and this is called the Employee Withholding Certificate form. There's some information you have to fill out at the top that's not really important to your withholdings. The parts that calculate your withholdings are step 3 and step 4. And step 3, if you have any children or dependents dependents, you put them there. And then step 4 are other incomes, any deductions, or any extra withholdings. And these numbers you can calculate via a worksheet on the W-4. So if you keep scrolling, there's a deductions worksheet. So for step 4B, which you fill out with like itemized deductions, the standard deduction amount, and then you pick essentially the largest deduction you can get. And the idea is just you need to keep this information updated, especially if you work for a company for a long time and your sort of situation changes. You have a child, you get married, you buy a house, any other circumstances that might affect your withholdings. Definitely keep the W-4 updated so you can pay as accurate to your actual taxes due as possible. So you might say, well, why don't I just essentially withhold 0 and just pay all my taxes at the end of the year? To dissuade people from doing that, the IRS has a underpayment penalty, and there are stipulations as to when this penalty applies, but generally, if you owe more than $1,000 after filing your tax return, you'll be hit with an underpayment penalty. So paying taxes is kind of this game. As I briefly mentioned before, it's a pay-as-you-go system, not a lump sum type system. So for example, if the IRS knows that you owe this much money, this is a bar and this is a scale of money because this is all I can create with right now. If you actually owe this much, so the IRS knows that you owe this much in taxes and you end up paying this much, your tax return will be the difference between these two, right? So if you overpay by $2,000, you'll get a tax refund of $2,000. If you underestimate your taxes and you underestimate by more than $1,000, you might get penalized and you'll have to pay the extra taxes. So the goal, I suppose, of this game is to guess as accurately as possible, but don't guess too high and don't guess too low. If you guess too high, you're loaning money to the government for free. If you guess too low, you might have to pay extra in taxes because of the underpayment penalty. It is quite confusing, and hopefully this helped a little bit, but the main point I wanted to make in this video is that generally a large tax refund is not good. I guess another sort of side reason I just came up with is that if you're loaning this money to the government, obviously it's not in your hands, so you can't use it. Theoretically, if you had $2,000, maybe you could invest it and get a return of 5 to 10% of the stock market over annually, or invest it in something else and make some better returns. Essentially, as long as you're not losing money, you'll be better than a 0% interest loan. So again, hopefully that cleared up some stuff about why large tax refunds are bad. I hope you learned something, and I'll see you guys next time.